Welcome to today's market breakdown for October 7th, 2025. Are you seeing the key reversal signals flashing across the market? Today, we're unlocking the market's next moves by dissecting the critical candlestick patterns that are shaping sector rotations and revealing hidden opportunities. Let's dive into an in-depth review of the detailed signals that define today's session. This advanced candlestick report delivers a full market snapshot and structural analysis, breakdowns by sector and industry, and a quantification of candlestick pattern counts by market capitalization. We will identify the most significant bullish and bearish trends, providing clarity on valuation status and measurement duration in each featured segment to help you navigate the price action. Today's session reflects a market generally holding near resistance on the S&P 500, with several indexes revealing key reversal signals and emerging momentum shifts. Most of our candlestick readings will use the daily duration as the primary measurement for these overarching signals. Looking closer, intraday patterns, including 15-minute and hourly candles, highlight significant rotational volatility in major large-cap sectors. These shorter-term charts are confirming signs of trend fatigue in some areas and signaling breakout potential in others, painting a complex but actionable picture of today's market dynamics. The morning session saw an early high around 10 a.m. Eastern Standard Time, followed by a midday consolidation before a late session dip established the low near 3:30 p.m. Eastern Standard Time. The dominant patterns in today's data are the bullish engulfing, harami, spinning top, and morning star formations. A bullish engulfing pattern occurs when a large green candle completely engulfs the body of the previous smaller red candle, signaling a powerful reversal where buyers have decisively overtaken sellers. Conversely, a harami is a two-candle pattern where a small candle body is contained within the body of the previous larger candle, indicating a potential pause or reversal in the current trend. We also saw morning star formations, a three-candle bullish reversal pattern appearing at the bottom of a downtrend, which consists of a large red candle, a small-bodied candle, and then a large green candle, confirming a shift in momentum. The dominant patterns in today's data are the bullish in large-cap healthcare stocks prominently feature these bullish engulfing and morning star candles, lending strength to a potential reversal phase after their extended period of underperformance. In contrast, the technology and energy sectors are exhibiting a mix of bearish patterns, including the hanging man and topping tail formations, which signal a possible correction or consolidation ahead. The hanging man is a single-candle bearish reversal pattern that appears during an uptrend, featuring a small body at the top and a long lower shadow, suggesting that sellers are starting to challenge the buyer's control. Looking at our technical interpretation, the healthcare sector shows frequent bullish engulfing and morning star formations on the daily chart. With notable trend breaks and broad upward moves, we are using the daily duration for confirmation, which reinforces the strength of this potential reversal. These patterns suggest a significant shift in sentiment, with buyers stepping in assertively. The technology sector, however, features topping tail and harami cross signals, especially among high-cap software and semiconductor names. The topping tail, or a long upper shadow, indicates that buyers pushed prices higher during the session, but sellers ultimately forced the price back down, signaling rejection at higher levels. Hourly candles are confirming this corrective risk, pointing to near-term weakness. Finally, energy stocks are displaying hanging man and spinning top patterns on both the 4-hour and daily timeframes. A spinning top is a single candlestick with a small real body, centered between long upper and lower shadows, which indicates indecision in the market. The presence of these patterns points to bearish sector rotation and a likely pullback scenario for energy stocks. Now for our sector and industry highlights, where we break down the major candlestick chart formations by sector and capitalization. The healthcare sector is our leader in bullish signals, with 16 instances of bullish engulfing and morning star patterns. This gives it a strong bullish bias on the daily time frame, and the sector is currently considered undervalued. The largest industry within healthcare, pharmaceuticals, accounts for a market capitalization of $920 billion and is also showing signs of being undervalued. This combination of strong technical signals and favorable valuation makes it a standout. In contrast, the technology sector is flashing warning signs. We counted 13 instances of topping tail and harami patterns, giving the sector a bearish bias on both the 1-hour and daily charts. The sector is considered overvalued. The semiconductors industry alone representing a massive $1.5 trillion market capitalization. This suggests that the high-flying tech names may be due for a correction. The energy sector recorded 12 bearish patterns, predominantly the hanging man formation. With a bearish bias on the 4-hour and daily timeframes, the sector is currently at a fair valuation. Its largest industry, oil and gas, has a market cap of $600 billion and is showing mainly correction signals, reinforcing the idea of an impending pullback. Moving on, the financial sector presented a more positive picture. With 9 long bullish candles contributing to a bullish bias on the daily chart, this sector is considered fairly valued, with the bank's industry having a market capitalization of $700 billion. A long bullish candle, characterized by a large green body with small shadows, demonstrates strong buying pressure throughout the session. Lastly, the consumer staples sector appears neutral, with 7 spinning top patterns indicating market indecision. These patterns are most prominent on the 30-minute charts. The sector holds a fair valuation, and its retailers industry has a market capitalization of $550 billion. The frequent appearance of spinning tops suggests a period of consolidation may be underway. Based on our analysis, market sentiment is cautiously optimistic. We are observing investors rotating into undervalued sectors that have confirmed bullish candlestick structures, with healthcare being the most notable example. Simultaneously, capital outflows from the overvalued technology sector indicate a high probability of near-term consolidation or potential downside risk. The financial and consumer staples sectors remain largely neutral, but with a minor positive drift. This is supported by the appearance of long bullish candles in financials and indecisive spinning tops in consumer staples, primarily on their daily and 30-minute readings, respectively. To summarize the day's action, the healthcare sector leads with a bullish count of 16 versus only 5 bearish signals. Its most frequent pattern was the bullish engulfing, and it stands out with an undervalued status, confirmed on the daily duration. Technology shows the inverse, with a bearish count of 13 against just 8 bullish signals. Its dominant topping tail pattern, overvalued status, and bearish signals on both hourly and daily charts suggest caution. The energy sector is also leaning bearish, with 12 bearish patterns, including the hanging man, against only 4 bullish ones. It holds a fair valuation, with key signals appearing on the 4-hour and daily charts. The financial sector had a positive day with 9 bullish patterns, primarily long bullish candles, versus 4 bearish, and maintains a fair valuation on the daily time frame. Finally, consumer staples was perfectly balanced with 3 bullish and 3 bearish signals, its spinning top pattern reflecting a neutral stance and fair valuation on shorter time frames. In conclusion, the healthcare sector is leading today's market with robust bullish candlestick signals, including the powerful bullish engulfing and morning star patterns. It stands out as an undervalued sector, particularly in the pharmaceuticals industry, which has a $920 billion market capitalization. In stark contrast, the technology sector shows the highest frequency of bearish formations like the topping tail and Harami cross. Its largest industry, semiconductors, appears both overvalued and at risk for corrective downside moves. The energy sector's neutral positioning and emerging bearish reversals urge continued caution. By examining patterns across daily, 4-hour, 1-hour, and select intraday durations, we gain optimal confirmation of these trends. This actionable review helps market participants navigate today's volatility confidently with pattern-driven insight and at-a-glance sector summaries. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.